Hello and welcome to another financial analysis video. Today we're talking about Waste Management, which has just released earnings. They came in at 74 cents a share, which was 3 cents higher than expectations and 2 cents higher than where they were a year ago. And so some decent earnings beat and performance boost from Waste Management. You know, looking at the company's operating performance, it is pretty impressive. So they've got a nice steep incline here on return on equity, now over and into the low 20s. Now on the leverage side, you'll notice that the company is also kind of downsizing a little bit, both on the asset and the equity side. They're getting a little bit smaller. So some of that is influenced by that, and you'll see it as well here in return on assets. So while it looks good, one of the other pieces that we look at here is we see the declining revenue, A, and we see declining asset turnover. So there is a little bit of a slowdown going on here within Waste Management. However, management is being very good about bringing that efficiency into the bottom line because they continue to see quarter to quarter trailing 12-month earnings grow. So they're not seeing a decline there like some companies in the S&P 500. Cash flow, and there again is that revenue decline. As you could see, it's down about $700–800 million on a trailing 12-month basis from 3 quarters ago. But the cash flow continues to, well, it bounced back, so it's looking strong. And on a free cash flow basis, there's $1.2 billion on a trailing 12-month. Waste Management has a pretty decent dividend, and they've been growing it over the last few years, right under the 3% yield mark, and at a payout ratio of 57%, I think that they're looking pretty good. By the way, I'll mention this because 9% dividend growth forecasted kind of caught my eye. That number is the dividend growth forecast, which takes the retained percentage of earnings and multiplies it by the return on equity. So the strengthening return on equity is definitely bullish for a growing dividend. The last thing I'm going to say about Waste Management is they are a very defensive company. The beta under 0.7 right now, which suggests that in heavy market volatility, Waste Management would not decline as much as the rest of the market. And that makes sense for the business model. Waste Management is a company that isn't going to see huge gyrations in its business because of the economy. So that makes sense. And so I was talking earlier about Procter & Gamble not being my favorite defensive company. I think Waste Management would be a really good one here. Decent dividend, good operating performance, all across the board pretty good. Keep an eye on that revenue though going forward. We'll see how that all pans out. I hope you enjoyed this video. Happy investing.